De-dollarization is accelerating. Right now, the global financial system revolves around one asset, the US dollar. But recently, countries around the globe are moving away from it and looking towards other assets like gold and Bitcoin. This matters more than you think, because if the world moves away from the dollar, it's not just governments that will feel the impact, it's everyone, including you. The value of your savings, your purchasing power, and the economy of every country in the world will dramatically change. But figuring out what comes next is absolutely crucial and could be the difference between being wiped out or thriving in the system that comes next. The world has always tended to settle on a single dominant asset for global trade. It makes transactions simpler, more predictable, and universally accepted. From ancient gold standards to today's dollar dominance, the global economy has always moved towards one primary reserve asset. The question is, what will replace the dollar when it inevitably loses its place at the top? In this episode, we're going to explore the qualities needed for an ideal reserve asset, the accelerating de-dollarization trend, the flaws of past reserve assets, and how Bitcoin is uniquely positioned to become the next global reserve asset. Why are countries around the world losing faith in the dollar's stability? Because the US has been freezing nation-state reserves, imposing sanctions, and controlling who can access the global financial system. Nations like China, Russia, and even some US allies are forming trade agreements that bypass the dollar. They're stockpiling gold, using local currencies, and even experimenting with Bitcoin to reduce reliance on the dollar. Many people say that the US military backs the power of the dollar, but no one realizes that it's rare earth metals that back the US military. And guess which country controls 95% of rare earth refining and processing? That's right, China. So China backs the US military? Well, effectively, yes. The US can't stay in conflicts for extended periods of time without risking running out of rare earth metals. China has already cut off exports to the US multiple times, but China has economic pain points of its own, namely the housing crisis and impending demographics crisis. So for now, everyone is playing nice until they can untangle this knot and become more self-reliant. This and Trump's tariffs in early 2025 are the ultimate signal of the end of the dollar as a reserve asset. But it's not just politics. The Federal Reserve's non-stop money printing is eroding purchasing power and trust. Countries are starting to realize that it's dangerous to rely on a currency that one government can manipulate. This move away from the dollar is happening faster than most people realize, and as countries scramble for alternatives, a new global reserve asset will eventually take its place. So what makes a good global reserve asset? A global reserve asset must have scarcity, portability, durability, divisibility, uniformity, and acceptability. Gold served as a global reserve for centuries because it met most of these criteria. But once we discovered radio and electricity, the global economy sped up significantly, and gold failed on portability. Transporting and securing tons of gold worldwide is too slow and impractical. The US dollar replaced gold because it was more portable and could be easily used for international trade, but it lacks scarcity. The Federal Reserve can print as many dollars as they want, leading to inflation and the devaluation of savings. Bitcoin, on the other hand, is scarcer than gold and more portable than fiat currencies. It's capped at 21 million coins, and transactions can happen almost instantly anywhere in the world. It's because it's digital, it doesn't degrade like a physical asset does. As long as the internet exists, Bitcoin will exist. Plus, it's divisible down to 100 million satoshis per coin, making it suitable for transactions of any size. One Bitcoin is the same as another on the network level, and while it's not as acceptable, adoption is growing faster than ever before. The dollar's role as the global reserve currency creates a paradox known as Triffin's dilemma, which happens when a single nation issues the reserve currency. Because the world trades in dollars, the US has to keep printing dollars to buy international exports. But this constant creation of new money devalues the currency. In simple terms, printing more dollars is good for global trade but bad for the US economy. As government debt piles up and inflation rises, the system becomes increasingly unsustainable. Bitcoin doesn't have this problem because it's not tied to any single nation's economy. Its fixed supply and decentralized nature means that it can't be inflated to meet demand, making it an inherently stable reserve asset once fully adopted. But let's be honest, Bitcoin isn't ready to become the global reserve asset yet. Size: Bitcoin's market cap is around $2 trillion as of August 2025, far too small compared to gold's $20 trillion. Volatility, Bitcoin's price can fluctuate wildly. A stable reserve asset needs consistency. However, it is expected to decline as adoption grows and Bitcoin matures. Adoption. While adoption is growing, Bitcoin still has a long way to go before it's universally accepted, and acceptability is an important feature of a reserve asset. However, as Bitcoin adoption increases and the price rises, these issues will resolve themselves. Once Bitcoin reaches $1 million per coin, its market cap will be roughly equal to that of gold, around $21 trillion. At that point, it could realistically start fulfilling the role of a global reserve. Are you prepared for a world where Bitcoin underpins the global financial system? Because it might be closer than you think. Stay ahead of the curve, understand the fundamentals, prepare for the shift. The financial revolution is here and Bitcoin is leading the way. If you found this video useful, please like and subscribe. Thanks for watching. See you in the next one.